Alright traders, got me streaming on a Friday today. Very rare. Apart from NFP, I don't usually do it, but I missed Wednesday this week, so I'm staying in tonight. Nah, maybe later we go out. So let's have a little look at what's happened. So Draghi was ostensibly pretty dovish, right? He tried to talk down the euro, but the market was having none of it, and with the upgraded economic forecast, a little bit more upbeat language in that regards, what you saw is that the market played with what it wanted to see, and that was that we're moving closer to this QE announcement in September, and without something else new from the ECB in the next 24 hours or for maybe Monday or over the weekend, i.e. something like leaking to the press, sources at ECB suggest September is too early for taper announcements. Yeah, something like this, right? Then the euro is on the way up and up. It's broken the highs from last year, held, didn't do a snapback, right? And on the weekly, this is a different weekly chart to what we've seen in the previous rallies. Okay, this is much more powerful, much more sustained, and much more real. Yeah, and it's come on the back of the fundamental moves and the weakness in the US dollar. So this definitely has legs. It may slow down a little bit, but probably we're going to take the highs at 2015 highs. Stops above that might push it up to say 117.50, and then it might slow down as the grind goes up, because the pricing in of ECB tapering is pretty well established, and the pricing in of the pricing out of the Fed raising rates is pretty well priced in already to the max. So in terms of where the risks are, it's the risk that US data bounces back. The ECB comes out and tries to talk it down more aggressively, or we're going to be at 120 sooner rather than later. Okay. Now, in terms of the speed at which the ECB story plays out, the normalization is a pretty slow story. They've got to taper first. But let's go back in time and see what happens as the US ended taper and started to raise rates. All right, let's have a look at the dollar index. This rally here in the US dollar was the beginning, okay, of talking about rate hikes and tapering. A very powerful, very sustained rally. So the euro, where it's coming from, that was the sell-off as they went tapering, as they went negative rates and then started to do QE. So this sell-off has a lot more normalization to go to. So a move back to 125 is normal in that environment, even if the US is raising rates, because the Eurozone is going from negative to much more positive, and the US may only stop at say 4 more rates, and the Eurozone has like 8 to 10 more rates to go in the next couple of years. So in the short term, 120 to 125 is sort of the equilibrium sort of point, and then as the Eurozone starts to raise rates, it'll go 130, 140, unless something happens, right? Something happens like Eurozone breakup fears resurface on Greece, or some populist movement wins majorly in an election. They've got elections all the time over there because it's 18 countries or so, right? So there's always that risk that the breakup could come back in. But Greece looks like it's got its bailout. There's really little to hang your hat on as a bear, apart from short-term bursts of US dollar strength, which can come through better US data, which brings forward the timeline for the Fed, or periods of ECB dovishness and delay talk. Yeah, that's the slowdown, the way that the euro will get volatility, two-way volatility. But in general, you want to be using any dip in the euro now as a buying opportunity for the longer term trend, which is pretty well established, and you can see the force behind it. Okay. Yeah, I mean, 2% inflation may be the goal, but I don't know. 2% inflation's not been seen anyway, right? Not been seen anywhere except for the UK, and that's because of its weakness in its currency. There's definitely the potential for all the central banks to lower their inflation targets, including Japan, to match the new raising rates strategy. Yeah, so they're definitely, I don't understand what you're saying there, Corny, but at some point, if low inflation is a part of the game, and apart from that, everything else is firing on all cylinders, they'll start to normalize. They definitely don't need negative interest rates in a 1.5 inflation environment. Okay, so even if they don't start the rate hiking cycle back to what would be normal rates at 3 or 4%, 5%. Getting from negative rates is definitely part of the game, even without high inflation. And they just have to do it at some point, right? They just can't let economies run for decades on negative interest rates, or they become zombie economies, similar to, say, how Japan has played out. And it's just not good for anything. You will never get out of it if you don't start to raise rates in some regards. Could come from an oil shock. I mean, how do you get high inflation? Probably oil shock in some regards would be the main way. Wage inflation seems like it's never coming back, so you know, we can't wait for that. And the Fed didn't, right? The Fed didn't. Canada didn't. You know, you will see rate hikes coming. Maybe not as aggressive if inflation doesn't get to their mandate. Maybe more aggressive if inflation goes over their mandate, though. You know, we've got some pretty timid central banks in the world right now. Global growth is fine. So let's see how it plays out, but definitely bullish in my regards to how I'm looking at the euro. And yeah, it's basically pick the pair you want to play against. Euro yen makes a lot of sense while stocks are strong. Dollar yen's having a little bit of trouble here, but nothing crazy, right? It's just under pressure because the US dollar's weak. Stocks are remaining very buoyant, very well stabilized, very happy at these levels, and all the Trump stories are being sort of pushed to the side, right? And not getting the traction that you would want if you're a safe haven sort of buyer. So buying the VIX, selling stocks, selling dollar yen, selling euro yen, selling pound yen, all requires a fair bit more risk off than we have right now, and we just don't have that. Gold's creeping higher, you know, but it's not conviction in that rally at the moment. It's more just US dollar weakness. It's the same way it's not conviction in the dollar yen down, it's just US dollar weakness. So you know, you don't have to sell euro yen in this scenario because dollar yen is not falling fast. Okay. But yeah, good point there, Corny. You know, if they're gonna back out of anything, they're gonna back out using inflation as their concern. What they've said though is that deflation is no longer their fear, so they've moved away from that sort of talk. Let's have a look at the Australian dollar. Big moves in Asia. Now, we had the big talk today, guys. The big speeches. We talked about this last night, what the speeches were going to be, what were they going to say. Basically, they said the things which the bears wanted to hear. That Australia is not Canada. So the rest of the world raising rates does not mean that Australia has to, which is basically trying to slow down the expectations there. In terms of the Australian dollar, a rising Aussie dollar lessens benefit of faster global growth for Australia, basically saying, you know, it's not good. They could have been more aggressive in that jawboning. In terms of the follow through to the selling, it's been muted to a little bit of reversal now. This is pretty bullish actually, given that, you know, in my world, the two more speakers that are coming up next week are going to be saying the same thing. Now, if they say the same thing, very hard to see how Aussie dollar doesn't have more volatility or sideways action. So the 80 test, while it's possible on the back of US dollar weakness, I think is probably delayed here. Yeah, I definitely wouldn't be buying here or anywhere near higher. I don't see the story where Aussie's going to 80 cents without the euro going berserk and going to, say, 118, just non-stop, just sharp rally, and US dollar getting flooded. You are seeing the Kiwi finally have its move. It's enjoying a nice little rally here. Broke its highs from previous years. So it was the Kiwi's turn. It's got a little bit more resistance than 75, and then above that it's pretty open. So it's finally playing catch up with the rest of the market. Aussie dollar though, I'm looking at ways to sell it. Yeah, I think it's had its run. I had a good run too, and I'm looking for ways to sell into rallies here. So this is a nice little rally to sell into. Straight Aussie US selling is okay, I feel. Risk rewards there for a move back to, say, 77.80. Aussie yen is okay as well. You'd want to see hopefully some sort of scandals and Trump situation with Russia deepening Euro Aussie seems the logical choice. So let's have a look at Euro Aussie. Technically getting people excited too. A little bit of selling as the Aussies bounced here. But looking to buy dips on the Euro Aussie makes a lot of sense. We did seem to get a rebound off the support level. And the outlooks, the differing outlooks and the speeds, if the RBA is going to continue to try and slow down the Aussies rally, potentially this is a nice way to play that. The Euro strength has a lot more to come, and in the event of a US dollar weakness, strength, I think the Euro is going to hold up a little bit better than the Aussie in this environment. But you never know. I mean, there is arguments to be made that the Aussie is outperforming with China, and we'll ignore the RBA's pleas to, the RBA, I mean, is not the all-powerful force in the market. The market is much more powerful in terms of the bond market, and the bond saying RBA is just trying to slow play us. We know where it's going next in terms of rates. But, to me, it makes a lot of sense to be looking to buy Euro Aussie on dips. This is a bit of a dip too. Interesting. Maybe a little bit lower here. Have a look at some of those highs from last night. We'll see if we can get into that. Not just yet. Not just yet. Let's see how this Aussie rally goes. This is the speech time it came out, so maybe it reverses above that. See if there's just takes out a little bit of stops intraday, where the sellers are at. Where are the sellers here in the Aussie? Get a bit of selling coming through on the AU US, and then we'll hop into either short Aussie or long Euro Aussie. That's the trade. In terms of US yields, under 2.3 still, the US 10 years, so dollar yen's getting no love there. There is an environment in which US yields rally as well, and you will see in that environment Euro yen and dollar yen both going higher, and Euro going high as well, but not when the yields are struggling here. So this is a slow grind, very much matches up with the dollar yen slow grind. Where's the support? We have to go back to the weekly, a fair bit away. Where did it get to? 2.3? 2.1? 2.15-ish. Okay, well, so we've got a bit of room there. That brings us down to around 110 on the dollar yen. And the euro would probably be at 118, 119 at those sort of US yields. All right, selling pound, asked Vikram. I mean, it's a trade. It's definitely a trade. It's one of the weaker pairs out there, the pound. Pretty much only up on the US dollar weakness. The euro pound's having a nice day. 130 is the level. If it fails that, people are going to notice. Let's have keep an eye on it. You could probably sell with a pretty tight stop and have a good risk reward there. It's not the worst idea I've ever heard at all. Selling the pound. Yeah, no, it's not bad. Definitely not looking to buy pound Aussie, but it's I mean, relying on Brexit headlines, which are coming out more and more negative as nothing happens and the stalling going on. But there's also, not much focus on the pound, right? You want to play the pair where the market's moving, and the pound's not moving too much right now. So the euro and the Aussie is where a lot of attention is focused right now. Dollar CAD's a little bit overdone, and there's a lot of dollar CAD data tonight. So Canadian data, I mean. So Canadian inflation, if it comes out as weak as it's expected, maybe will highlight the fact that the central bank over in Canada is only going to be raising rates from the emergency cuts that they did when oil crashed, and perhaps it's not starting a rate hike cycle. Push back on the market expectations there. Why would inflation come in lower? Because the Canadian dollar rallied so much in the last couple of months that that comes through as an effect on the price of imports, lowering the price of imports. So that's a huge move in terms of currency. If you're going to see inflation impacted anywhere in the world, it's going to be on the Canadian dollar. Alright, AU, yeah, we talked about AU enough, I think. Flechacho 93. Ah, your name's really hard to read in that font. Sorry, in that color, mate. That's maybe just me, but yeah, no, that's really hard to read. Let's have a look here at some of the bank research. Might be a pretty quiet day today. If the euro doesn't want to go berserk, then I don't see it leading the market too much. You might even see a little bounce if the euro wants to go back to 116. Have a little rest, have a little breather. Put my stop to entry here. Don't mind holding it over the weekend. Don't really want to run into an ECB announcement and be thinking about what to do next. So just get out if I make some money, and that's it on that one. Otherwise, I'm happy to let it run to 118-ish. In terms of, actually, I'm going to put a take profit in, because if the market moves quickly, I want to get out on a spike. Yeah, that's something. Get out of there. Yeah. 117.90. Because it could be a very sharp spike as all the shorts are sort of routed, and then after that you get a pullback, pretty sharp pullback after that usually, if it's a short squeeze at this late stage in a rally. That sort of pullback after the short squeeze is very common, and definitely if that happens, then the Aussie might test 80 cents. So keep that in the back of your mind about where Aussie can and cannot get to. Don't try to put limits on it. It's the impact of the RBA with so much good news and sort of goodwill behind a pair is sort of limited. But if they keep on saying the same things, then the Aussie's probably going to fall. Let's have a look at the Euro Aussie right now, actually. Might buy a little bit of Euro Aussie just here at these levels. See if we can't get a nice entry. I'll put my stop below that low level. Okay, so basically the Aussie has to have a really stellar day, or a stellar recovery in immunity, or you get the ECB comments I worry about to get stopped out of that. Top side could get quite nice on many scenarios too, though. Yeah, so that's pretty much it. Let's have a look at some of the bank research, guys. I think inflation might be more important than the retail sales for the Canadian data. Looks like their retail data is really volatile, so probably not as impactful. But to be fair, I don't trade Canadian data much, mate. So Canadian dollar, I actually trade Aussie dollar a lot more, given the time zone I live in. So it's not my favorite trade, but I definitely did see some smart money starting to buy dollar CAD as maybe a pushback from global central banks, or at least the Canadian bank, on how many times they're raising rates. Might start to see these valuations stretched. Oil's pretty strong though, so it does have a little bit of backing, doesn't it? But you know, 125 is sort of the target, and we're pretty close. We're pretty close. Two-way actions is there. So yeah, I did see some good traders trading that. You get more information as well. If the numbers come in weak and the Canadian dollar remains strong, similar to how the jawboning in the Aussie dollar and Aussies hasn't capitulated, means there's a little bit more at work, which is like the undercurrent of US dollar weakness is pretty strong at the moment. Danske Bank, let's have a look at what you say here. A little review of it. ECB kept unchanged policy. Yeah. Chords goes to easy bias. So they didn't remove any biases, but that was not enough. A discussion should take place in the autumn. Alright, so they're suggesting maybe September's not the meeting we're going to get it. maybe December. Alright, they believe it's going to be October now. ECB reflected increase in focus on inflation versus economic recovery compared to what was communicated at the big speech where Draghi came across hawkish at that European Central Bankers meeting. It was it was like a conference for central bankers around the world. Persistent, patient, and prudent. Yeah, if you watch the Draghi speak, he was kept on trying. Yeah. Jackson Hole's coming up too, guys. That's really sometimes where you see some big news happen. Oh, they see risk due to the downside. Okay, I think the euro's overdone and the Draghi. All right. Don't know how they're so bearish. Alright, however, we maintain the views in any dips in the euro are likely to be proved short-lived, and we're buying cross on dips. Okay. So they're targeting 118. So they're saying it's a little overdone now, but they're looking to buy dips. Not much to read there. Not giving us much information that we don't already have. It felt in the end, Draghi. This is Deutsche Bank early morning read. Very, pretty spot on usually in terms of just checking sentiment. Also, the reason we read this is that it's the most widely read sort of rant in the market by all the funds. Two steps forward, one step back. Yep. Really undeterred. Yeah, he wasn't panicking, that's for sure. Alright, so they've moved as well to October, so it looks like September 7th map too early. Alright, so maybe we will simmer a little bit. It might take a little bit longer to get the big move, because the market likes to buy into big announcements. So, the rally that could come next month in August would be sort of precipitated on what's the right word? Not precipitate. Would come if in August, would come going into September as everyone focused on it. Now you might have to wait until after this one, and as we go into October. Maybe October's the big moves. Nothing else. Quiet days. See if we can find something a little bit under, a little bit different. Little Friday something funnies, huh? Let's see what we can find. Oh, just quickly though, Goldman Sachs, want to see what they're saying about the ECB. This was yesterday, before the announcement. Two secs, let me have a look, guys. Let me have a look for something a bit more fun. Yeah, this one's quite nice. I read this earlier. So pretty good market for following trends, guys. Pretty good market for following trends. Perhaps that's where the danger in selling the Aussie comes from. Right, Aussie's broken out of its 6-cent range. Persisted for better past 2 years. I don't think the RBA is in a hurry to hike over. I think it's fair to assume the discussion is more consistent with bank thinking about higher rates on the horizon. Job creation has been encouraging lately. Yep, last 4 months have been very strong. The front end of the curve has sometimes priced in little and form pricing with 6 price as much risk as Aussie's going to retain a supportive tailwind. We've got a strategic US dollar bearish move. Technically, RSI's overbought territory, creates notable snapback risk. Yeah, I think it is going to snap back, and then that will probably hold. So the new range, probably new range trading. The Aussie loves range trading. In the last couple of years, I don't know if we're ready for the big move just yet. Higher. Aussie needs to correct first and before it settles into a higher range. Okay, all right, I can fully understand that happening. Now Aussie Kiwi is very interesting. Aussie Kiwi had a huge reversal as the Kiwi broke, and the Aussie was snapped back. Now where can we buy this little baby? I was thinking about this all day. Where can I buy this? Does it get low enough here? 106.30. Is the Aussie going to have a second leg of sell-off? Was this actually the buy already? I actually probably want to get close to 106. Putting my stop below 105.50. See if we can sort of play the trade there, or whenever the Kiwi gets closer to 75. See how it plays at those levels. Kiwi's definitely on the move here though, very bullish. Perhaps the strongest of the commodity currencies for the next couple of days as it plays catch up with everyone else. Why is Euro rallying? Is it because of CAD retails? No. Euro is rallying because of ECB yesterday, LMG. Yeah, no, it'll take some time, man. I know you're new to the game and what we're doing, but yeah, every pair has its sort of personality and what we're looking at for why it moves and what's a big thing for it and what's surprising, where strength comes from. The Euro's got a lot going for it at the moment. The Aussie has a fair bit going for it, apart from the RBA. So the RBA tried to take the wind out of the sails, and so far that's not working out probably as they planned. So we'll see what the speakers next week have to say about that. And the New Zealand actually had some jawboning done earlier in the week. So the fact it's continued to rally is probably going to piss off some of the New Zealand RBNZ as well. But not much they can do against the market really. You'll see sometimes that jawboning is very ineffective, especially if there's a big trend developing, and that's where I can see the Aussie and the Kiwi continuing to do very well on dips, but just short term coming into a little bit of two-way action rather than just one-way action. So basically, the takeaway from this is I want to buy the Euro lower if I'm not in the market already. I want to buy the Aussie a lot lower. I want to buy the Kiwi maybe back towards 74. I'm not really touching the dollar yen here or the yen crosses too much. Yeah, looking to sell the US dollar, just not really at these levels. This is multi-year lows on the dollar index now. Or getting towards dollar index multi-year lows actually. We've got some big supports coming through here. So it's another reason why you can expect the US dollar selling to slow down a little. There's not that huge story yet that can get the market going crunch. Something like Trump getting into deeper trouble would be the story that would crunch the US dollar. But it's so far he's been able to avoid that sort of speculation. Alright guys, good luck with your trades tonight. I'll probably be around later for the CAD data, see how it goes out. If you have any questions, please let me know in a little personal message. You can send personal messages to other traders here in the room. Otherwise, I'll be back on Monday, and we'll see what the weekend brings us.